Right. I need quick answers. Right. Send me answers to my host. Okay. When you're sending answers through the Zoom, send me answers to my host. Right. Right. Now give me quick answers. Which of the following statement best describe the prime purpose of an organization's financial accounting? Right. Question 151. What's the answer? All right. Question 151. A simple question. Yes. Yes. Question number 151. Answer is 5. Fifth one is answer. Okay. Fifth one is answer. Right. Okay. Right. Right. Question number 152. What's the answer? The accounting concept which guides to record the cash received in advance during the accounting period under current liabilities. Now, my question number 152. What's the answer? Send answers to my host. Okay, let's try. The accounting concept which guides to record the cash received in advance during the accounting period under current liabilities. 152. What's the answer? The Hamza. Mahima, I got round of the answer from Chamodi. Devmi, what's the answer? Mahimi. Prithik. Yuvi. Right. What's the answer? Question 152. What's the answer? Accounting concept which guides to record the cash received in advance. Cash received in advance during the accounting period under current liabilities. Students, cash received in advance, then income received in advance. Income received in advance. Business organization received an income in advance. Income in advance. Right. Now, then what's the accounting concept? Income received in advance. Cash received in advance means income received in advance. What is the accounting concept? Second one. Realization concept. Realization concept. Okay, right. Students, until transferring risk and reward to the customer, we can't recognize income received in advance. Income received in advance as an income. Okay, realization concept. Realization concept. Clear? Clear? Mahima, clear? Somebody clear?
Clear, sir.
Clear? Right. Cash received in advance. Income received in advance. Okay, right. 153. Question number 153. The accounting concept that guys used to record year-end inventory at the lower of cost and NRV. The accounting concept that guys used to record year-end inventory at the lower of cost and net realizable value. Question number 153. What is the answer? My question number 153. What's the answer? We record year-end stock at the lower of cost and net realizable value. What's the answer? Yes, Ritvik, correct. What's the answer? The Hamsa. Yes, Shamodi, correct. First one is answer. First one. First one. Prudence concept. Okay, prudence concept, right? Right, prudence concept, right? Right. Lamai, right. Use the following information to answer question number 154 and 155. Right. Easy question. Right. Now here, a business sold an inventory costing 40,000 on credit to Hashan. A business sold an inventory costing 40,000. Inventory costing 40,000 on credit to Hashan. Sales invoice for 60,000 subject to trade discount of 5%, and after 2 weeks, the settlement was made after deducting a cash discount of 10%. And the check was dishonored. This was correctly recorded in the books. Right. Question number 154. What is the answer? The source document related to recording the above transaction in the prime entry books, respectively, are Devi. Source documents. Answer is what? Yes, yes, correct. Yes, Yunus, correct, right. Now, what about others? Huh? Correct source documents? Yes. Second one is answer. Invoice, receipts, journal object. Right. Second one is answer. Right. Question number 155. The answer that correctly shows the net effect on the accounting equation after recording credit sales in the above transaction is. The answer that correctly shows the net effect on accounting equation after recording credit sales in the above transaction is. After recording credit sales. Right, what's the answer? Right. Kamai, what's the answer for the question number 5? Right. What's the answer for the question number 155? 155? Yes, fourth one is answer. Fourth one is answer. Inventory decreased by 40,000. Debtors increased by 57,000. Equity of the business increased by 17,000. Right there. Answer that correctly shows the net effect on accounting equation after recording credit sales. After recording credit sales. Okay. Right. Answer is fourth one. Fourth one is answer. Fourth one is answer. Okay. Right. Right. Question number 156. Question number 156. 156. Right. What's the answer? Question number 156. What's the answer? One 156. Right. I got one of the answer from Chamod. Right. 156. Okay, right. Okay, right. I got another one. Right, Lamai. 156. What's the answer? 156. Dahamsa Devi, Gauri, Mahima, Prithik, Yuvi. Right, what's the answer for the 156? One 156. What's the answer? I got only two answers. Right, now I will discuss. THINETH business is registered and settled for 10% VAT. Transaction recorded for the year ended 31st March 22 are given below. These are the transactions of business. Credit balance on in VAT account 3,000. VAT account credit balance 3,000. Opening balance. Okay, right. VAT account. Question number 156. Question number 156. VAT account. VAT account opening balance 3,000. VAT account opening balance 3,000. Right. VAT account opening balance 3,000. VAT account. Purchases including VAT during the year 44,000. Purchases including VAT. Then from these purchases we need to remove VAT. Right. How much VAT? 44,000 divided by 110 multiplied by 10. Then you can calculate the VAT amount. Then you can calculate input VAT. Input VAT. 44,000 divided by 110 into 10 is input VAT 4,000. Input VAT 4,000. Then purchases 4,000. Purchases 4,000. You need to calculate gross profit of the business. Gross profit. How to calculate gross profit? Sales minus cost of sales. Okay, right. Then here purchases 40,000 purchases. Purchases 4,000. Input VAT. VAT account debit 4,000. Input VAT. Input VAT. Okay, right. Sales including VAT for the year 110,000. Sales including VAT. Sales 110,000 divided by 110 multiplied by 10. Then sales with VAT how much? Sales with VAT are 10,000. Sales with VAT 10,000. Okay, 10,000. Then output VAT. Output VAT you need to credit into VAT account. Then sales how much? Sales 100,000. Sales of the business 100,000. Sales. Return outward including VAT. Return outward. Purchase return including VAT. Am I return outward including VAT? Here 2,200 divided by 110 multiplied by 10. Multiplied by 10. Then how much VAT amount? VAT amount is 200. VAT amount is 200. Return outward. Return outward also double it. Return outward. Return outward. Creditor control account debit 2,200. Creditor control account debit. Creditor control account debit. Purchase return account credit. Or stock account credit. VAT account credit. Then VAT or return outward. VAT account credit. Return outward. Return outward VAT. Return outward VAT. VAT account credit. VAT payable account credit. VAT payable account credit. Okay. Fine. VAT payable account credit. And then return outward purchases minus. Return outward purchases minus 2,000. Purchases minus 2,000. VAT paid in cash during the year. VAT paid in cash. Cash book credit. VAT account debit. VAT account debit. VAT paid in cash. VAT paid in cash 5,000. VAT paid in cash 5,000. And then Net increase in stocks during the year 20,000. Net increase in stock. If you are unable to do, okay, if you are unable to identify whether we need to plus or minus net increase in closing stock, okay, if you can't identify, okay, what we need to do for the net increase, so net decrease in closing stock, okay, you can apply this method here. Net increase in stock during the year, net increase, then closing stock is higher than the opening stock. If opening stock 0, if opening stock 0, closing stock 20,000. Net increase in stock during the net increase. It means if opening stock 0, closing stock 20. Let's say if examiner gave you net decrease in stock, net decrease. Then insurance. If opening stock 5,000, closing stock 0. Net decrease in stock by 5,000. Here, net increase in stock during the year 20,000. Net increase then, or if opening stock 0, closing stock 20,000. 20,000. Here, you need to calculate the gross profit for the year. Gross profit for the how much? Gross profit 40,000 minus 2,000 and 20,000, 18,000. Cost of sales 18,000. Then 100,000 minus 80,000, 82,000. Yes. Gross profit 18,000. Sorry, 82,000. Some of this answer is correct. Some of the I think euros. Ne? The answer is correct. Then what payable amount? How much? What payable amount? What payable amount? What payable amount? Yes, 4,200. Yes, your answer is correct. Answer is 4,000. Answer is 4,000. Answer is 4,000. Right. If you want to explain something detailed again, please send me a message. I will explain. Right. What payable amount is 4,200. Okay, what payable amount is 4,200 plus with 82,000. Right. Okay, clear? Is it clear? The house are clear. Mahima clear. Mahima is it clear, Mahima? Devi clear, Devi?
Yes, sir.
Correct. Question number 156. Right. Lamai, look at the question number 157. Question number 157. Right. What is the answer for the question number 157? What's the answer? The details of Asanga Limited Company are given below. Billing when issued in advance, opening 20, closing 30. Prepay rates, opening 1,000, closing 0. Below are the transaction and information that took place during the year ended 30 March 22. Billing when issued in cash, right? Rates paid in cash, rate expenses for the year. Billing rental income for the year ended 30 March 22 and prepay rates, right. Number one answer. Simple question. 157. The Hamsa, right? Now, right. Right. Lavai, 157, a simple question. Right, Lavai, do you want to discuss this question? 157? Do you want to discuss? Lavai, do you want to discuss question 157? Right, 157. 157. Right, Lavai, billing when received in advance. Right, when received in advance, opening balance 20,000, closing balance 30,000. Received in advance. Prepay rates. Rates, opening balance 1,000, closing balance 0. Closing balance 0. Below the transaction information that took place during the year ended 31st March 22. Billing rate received in cash. Cash book debit, billing rent account credit 150,000. Rates paid in cash. Cash book credit, credits account debit 9,000 cash. Rates expenses for the year 6,000. Rates expenses are P&L debit, credits account credit. P&L debit, credits account credit 6,000. Rates for the period. Right. Then billing rent income for the year. Billing rent income you can calculate to this account. Right. 150, 170,000. 170,000. 170,000 minus 12,000. 140,000. Right. 140,000. Billing income 140,000. Yes. 4,000 is answer. Yes. 4,000 is answer. Here 10,000. Yes. 4,000. Right. Now answer is 4,000. Question number 157. Answer is 4,000. Right. Look at the question number 158. Right. Question number 158. What is the answer for the question number 158? What is the answer for the question number 158? The net salary paid by Suresh Company Limited for the year ended 31st March 22 was 2,560, including 60 annual living expenses allowance. Right. Companies employee provident fund, EPF contribution and employee contribution 50%, 10% respectively. Right. Calculated on basic salary. Okay, right. Also, annual fee of 200,000 has been deducted for welfare association. Welfare association, for the welfare association, they have deducted 200,000. The basic salary and salary expenditure for the year ended 31st March 22 is the basic salary and salary expenditure for the year ended 31st March 22 is. What is the answer for the question number 8? Question 158. Tamai, what's the answer for the question number 158? Can you give me an answer? Question number 158. The net salary paid by Suresh Company Limited for the year ended 31st March 22 was 2,001. Net salary paid amount. I got one of the answer from Dahamsa. Okay, right. Net salary paid amount 2,560. Net salary paid amount. including 60,000 of annual living expenses. Right. I got another answer from Yunus. Right. First answer. Kamodi Gauri. Ritik. Yuvi. What's the answer? 150. Right. Including 60,000 of annual living expenses allowance. Companies employee provident fund EPF and EPF fund 50% temporary respectively. EPPTF calculated based on basic salary. Also, annual fee of 200,000 has been deducted for welfare association. Welfare association. Welfare association. The basic salary and salary expenditure for the year. Question number 158. 158. Net salary paid. Salary control account. Net salary paid in cash. Net salary paid in cash how much? 2,560. Net salary paid in cash 2,560. Okay, and the next one, when they pay this 2,560, they have deducted welfare association payment 200. They have deducted 200. Welfare association 200 they have deducted. They have deducted welfare association payment. And then what? And then they have deducted EPF 10%. EPF 10% on basic salary. On basic salary. On basic salary. Net cash payment plus welfare association payment. How much? How much? Total amount how much? 2,760. 2,760. Okay, and then here they have added 60,000 annual living expenses. 60,000 annual living expenses. 60,000 annual living expenses. Then now this 2,760 including annual living expenses. Including annual living expenses. Then you need to deduct that living expenses from this amount. Then you can calculate 2,700 basic salary after deducting EPF. 2,700 basic salary after deducting EPF. EPF 10%. EPF 10%. They have deducted 10% from the basic salary. This is the basic salary after deducting EPF 10%. Then divide 2,700 by 90. Okay. Divide 2,700 by 90. Multiplied by 100. 100 to calculate basic salary. How much basic salary? How much basic salary? 2,700 divided by 90 multiplied by 100. 3,000 basic salary. Basic salary 3,000. Clear? Somebody clear?
Clear, sir.
Clear. Then UV clear. UV clear. 3,000 basic salary. Basic salary 3,000. Okay. To this basic salary they have added. To this basic salary 3,000 they have added annual living expenses 60. Annual living expenses 60. Then 3,000 minus 2,700 means EPF 10% 300. This is a self-control account. Then students, first one is basic salary. Okay, the annual salary expenses. This annual salary expense. Annual salary expense. Annual salary expense. Right. Annual salary expense. Right. 3,016. 3,016. 60,000. Yes. Here annual salary expense 3,060. 3,060. Annual salary expense. Salary expense 3,060. Employee related total expense how much? Employee related total expense 3,000 into 15%. 450. If examiner asks you to calculate salary expense for the period 3,060. Living expense 600, 16 living expense. Yes. Now my salary expense 3,060 salary expense. But if examiner asks you to calculate employee related total expenses 3,060 plus 15% EPF contribution. Okay, 50% EPF contribution on basic salary. 450. If examiner asks you to calculate the total employee related expenses, 3,060 plus 50%, 3,510. If examiner asks you to calculate the total employee related expenses, 3,510 total employee related expenses. And then according to this question, salary expenses for the period is 3,060. 3,060. Yes, 3,060. I think annual salary expenditure, there is no answer. For the annual salary expenditure, there is no answer in this question. Maybe a printing mistake. Maybe a printing mistake. Now I write down. It should be 3,060. Yes, yes. Someone here. Adjust for my annual salary expenditure here. Please adjust this one as 3,060. 3,060. And then get the answer as 3,060. Fourth one. Okay. Get the answer as 3,060. If examiner asks you to calculate employee related total expenses, that one should be 3,510. Okay, 3,060 plus 450 EPF 15% contribution. But here you need to calculate only annual salary expenses. Then Answer should be 3060. Clear? Right. Ritik clear? Ritik. UV clear? Devi clear? Chamodi clear? Chamodi? Right. Question number 159. What's the answer? Question number 159. What's the answer? 159. What's the answer for the question 159? Lamai, what's the answer for the question 159? I got answer from Chamodi. 159, Dhamsa, Devi, Gauri, Prithvik, Yunus, UV. What's the answer? Answer for the 159. Third one. Right? Oh no, I got 1,000. Dhams. What's the answer? 159. Now I 159. Right. Which of the following statement is correct regarding the data control account of a business? Regarding the data control account of a business. A. Correct answer. A. The balance of debtors control account is reduced by the A. The balance of the debtor control account increased due to dishonored check received from debtors. True or false? Sorry, correct or wrong? The balance of the debtors control account increased due to dishonored check received from debtors. Correct or wrong? True or false? True or false? Now, true or false? Yes, that is true. Correct. That is true. B. The balance of the debtors control account is reduced by recovery of written off bad debts. No, no impact. No impact. Recovery of written off bad debts. No impact. No change. Not reduce. Not reduce. Okay, right. No impact. No impact. And then my C. The balance in the debtors control account decreases due to return inward. That is true. That is true. Because of return inward, debtor account balance decrease. Right. That is correct. D. The balance of the debtors control account decreases due to under provision of doubtful debts. Provision for doubtful debts. Allowance for expected loss. No impact to debtors control account. We maintain separate debtor control account for the debtors. We maintain separate account for the allowance for expected loss. Therefore, under provision of provision of allowance for expected loss will not impact to debtor control account. No impact. Lamai, what's answer? A and C. Fifth one is answer. Fifth one is answer. Fifth one. Okay, fifth one is answer. Somebody clear? Doubt clear? Okay, right. 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 Question number 160. Right. Question number 160, what's the answer? The concepts which guide to identify the inventory at the lower of cost and net realizable value in the statement of financial portion at the end of the period is. The concepts which guide to identify the inventory at the lower of cost or net realizable value in the statement of financial portion at the end of the period. That's answer. Answer for the 160. Right. Now in the statement of financial position, we record is inventory under according to we recognize closing stock at lower of okay cost of NRV. Okay, based on prudence concept, prudence concept. Okay, prudence concept. Assets should not be overstated. Liability should not be understated. Okay, therefore, based on prudence concept, we record stock at cost of NRV, whichever is lower in the statement of financial position. Third one is answer. A only. A only. A only. Matching concept directly apply to income statement. Okay, to record correct cost of sales, we adjust the closing stock. Okay, matching concept. To identify correct cost of sales, we adjust closing stock to the cost of sales. That is based on matching concept. Matching concept. Here, okay, the answer is A only. A only. Right. Right. Question one. Lamai, we'll take a break. For a break, right, students. Question number 161. What's the answer? The inventory of Kanishka Public Company Limited as of 31st March 22 was destroyed due to fire, except a stock of 100,000. except a stock of 100,000. It was estimated that the salvage stock can be sold for 180,000. That 100,000 stock can be sold at 118,000 after incurring an expense of 25,000. After incurring an expense of 25,000. The transactions related to the stock during the year ended 31st March 22 are as follows. Goods are sold at 20% profit on cost. Goods are sold at 20% profit on cost. The physical stock as at 1st April 21 is 300,000. Purchase stock 3,500. Sales 3,600. Return outward 200. Return inward 240. And then 80% insurance compensation has been approved for the damaged stock. And then the value of the stock damaged and the total loss to the business as of 31st March 22 are. What's the answer? Damaged stock. Damaged stock, value of the stock damaged and total loss. Total loss. What's the answer? 161. What's the answer for the 161? What's the answer for the 161? Stock damage and total loss. Right. I put one of the answer the Hamsa. What about others? Samodi, right? Here the total loss and stock damage. Stock loss and total damage. 161. Look at the 161. Students, in this question, inventory of commercial business was destroyed due to fire except stock of 100,000. Salvage stock 100,000. Rescued stock 100,000. Salvage stock. Rescued stock 100,000. It was estimated that salvage stock can be sold for 180,000 after incurring an expense of 25,000. 25,000. Okay, right. Lamai, here the transaction related to stocks during the year. We'll calculate. Right, Lamai. How much should be the closing stock of this business? How much should be the closing stock of this business? Here, opening stock 300,000. Purchases 3,500 purchases. Sales 3,600 sales. Return outward 200. Return inward sales minus return inward 240. Return inward. Okay, then here here, right? In this question now, in this question, here, net sales how much? Net sales 3,600 minus 240 net sales 3,360 net sales. Net sales. From the net sales, you need to deduct cost of sales, and then you can calculate gross profit of the business. Gross profit. In this question, goods are sold at 20% profit on cost. 20% profit on cost. 20% profit on cost. Then 3,360 divided by profit on cost. Markup. Divide by 120 multiplied by 100 to calculate cost of sale. 20% on cost. Then cost 100, profit 20, selling price 120. Then 3,360 divided by 120 multiplied by 100 to calculate cost of sales. How much cost of sales? 3,360 divided by 120 multiplied by 100, 2,800. Cost of sales 2,800 of this net sales. Of the net sales. Then you know cost of goods to be sold. Cost of goods to be sold. Stock presented for the sale 300 plus 3,500 minus 200 3,600. Stock presented for the sale 3,600. Then closing stock should be how much? Closing stock should be how much? 3,600 minus 2,800. Closing stock should be 800. Closing stock should be 800, but out of this closing stock 800, right? Is it? Closing stock destroyed due to fire. But out of this 800, okay, they have removed 100,000 stocks. Salvage stock. Okay, salvage stock. Okay, total stock fired except 100,000. Then that 100,000 is right there. Then out of this 800,000, 100,000 rescued stock, salvage stock. Then stock damage how much? Here, value of the stock damage 700,000. Value of the stock damage 700,000. We are discussing question 161. Stock damage 700,000. We can get answer second one of fifth one for this question. Second one of fifth one. Stock damage 700,000. Okay. And then next one is total loss. Total loss. Total loss due to this incident. Total loss. Total loss. Now, insurance company agreed to pay us 80% of this damage. Okay, from this stock damage 700,000, insurance company agreed to pay us how much? 80%. Then now the loss is how much? 700,000 into 20%. 140 loss. 140 loss. Okay, insurance company agreed to pay us 80%, then balance 20% loss for the business. Balance 20% loss for the business. Balance 20%. But here you will calculate total loss. Now rescued stock 100,000. Salvage stock. Salvage stock 100,000. This is the cost of the salvage stock. Cost. This stock can be sold at the market for 118,000 now. We can sell this stock at the market for 118,000. We can sell this stock at the market for 118,000. Incurring after incurring an expense of 25,000. After incurring expense of 25,000. Estimated sales price 118,000. Estimated sales expenses 25. Then 180,000 minus 25. Net realizable value. How much? 93. 93. Net realizable value 93. Then cost 100. NRV 93. Here the loss is how much? 7,000 loss. 7,000 loss. 7,000 loss. Then here 20% loss for the business, and then here right. Alright, now here the loss is 7,000. Okay, right. The loss is 7,000 here. Cost is 100,000. NRV 93,000. Written off amount. Stock written off amount 7,000. Then total loss is how much? 147,000. Total loss is 147,000. Then answer for the question number 61. Fifth one is answer. Fifth one is answer. Stock damage is 700,000. Total stock loss is 147,000. 147,000. Okay. 147,000. Clear. Now, is it clear? 161 clear. Fifth one is answer. Fifth one. Fifth one. Right. What is answer for the question number 162? One 62. The prime cost and the total production cost and the prime cost, total production cost and total direct expenses of a business is 500,000, 900,000, 200,000 respectively during the period. Decrease in stock of raw material is 30,000. Increase in stock of work in progress 50,000. The purchase value of raw material and production overhead cost of the period are right. Question number 12. Sorry, 162. Question number 162, what's the answer? I got one answer of Dahamsa. Dahamsa. Right, Lamai. What about others? Chapter 7, manufacturing accounting question. Grade 12, chapter 7. Manufacturing accounting question. What's the answer? I got another answer from Chamoli. Right? What's the answer? A manufacturing accounting question. Manufacturing accounting. 162. Right, 162. Here, in this question, in this question, in this question, 162, manufacturing account, manufacturing account, manufacturing account. Here, the prime cost of the business, prime cost 500%, prime cost 500,000. Total production cost 900,000. Total production cost 900,000. Total production cost 900,000. Total direct expenses, the prime cost 500,000. Total production cost and total direct expenses. Total direct expenses means it should be total other direct expenses without raw material. Direct expenses, total direct expense is 500,000 prime cost. In the question now, total direct expenses means normally total prime cost. Okay, total direct expenses, total prime cost. Okay, then direct cost, another name for direct cost is prime cost. Prime cost. Total expenses means total prime cost, but here we'll consider this 200,000 as other direct expenses. Okay, total other direct expenses 200,000. Total other direct expenses 200,000 without raw material. Without raw material. Then decrease in stock of raw material 30,000. If opening raw material 0, sorry, decreasing stock of raw material 30,000, right? If opening raw material is 30,000, closing raw material 0. Decrease in stock of raw material is 30,000. Decrease in if opening stock 30,000, closing raw material 0. Increasing work in progress 50,000. Work in progress. Work in progress opening, work in progress closing. Increasing work in progress. If opening work in progress 0, closing work in progress 50. Closing work in progress 50. Increasing work in progress is 50,000. 50,000. Okay, then here raw material purchases. If prime costs 500, here the raw material amount is raw material consumed amount is 300. Okay, then here purchases. Then 300 minus 30. Opening stock 0, closing stock 0. 300 minus 30. Purchase of raw material 270. 30 plus 270 minus 0, 300. 270. Purchase of raw material 270. Purchases. Production overhead costs. Production overhead costs. Okay, then right then here opening work in progress 0, closing work in progress 50, then 50 minus. Then 900 plus 50, 950. 950 minus 50, 900. If prime cost 500, 950 minus 500. Overhead cost 400 and 500 plus 450, 950, right? 450. Overhead cost. First answer. First answer. Right now, what's the answer for this question? Yes, yes. Second one is answer. Answer is second. 270 and 450. 270 and 450. Clear. The answer clear.
Clear, sir.
Clear, right. They were clear. Manufacturing accounting, not manufacturing accounting. Right. Now give me 5 minutes. 5 minutes. Right. Dasun and Kusal are engaged in a partnership business by sharing profit or loss at the ratio of 3:2. The balances extracted as at 1st April 21 are given below. These are the balances. Capital account for 4,000, 3,000. Current account 150, 200. Right. According to the partnership agreement, the partners are entitled to 10% interest on their capital. No equity transactions have taken place. Other than the drawings 150 and appropriating the profit for the year 31st March 22. Vanidhu was recruited as a new partner on and he invested 2,500. Goodwill he has been valued and recorded in capital account as at the date correctly. The new profit ratio 3:1 as at 31st March 22. Vanidhu's capital account balance 2,000 and the balance of the Dasun current account is 1,000. Okay, right, and then the goodwill of the business as at 31st March 22 is goodwill. Question number 162, 163 goodwill. Next question is the profit for the year ended 31st March 22 and the balance of the Kusal current account as at 31st March 22. Right. Goodwill of the business. Lamai, how are the goodwill of the business? Question number 163. What's the answer? I got two answers. Goodwill of the business. Right. Vanidhu has taken right. Vanidhu brought to the business organization 2,500. 163. Question number 163. Here, Vanidhu brought 2,500 to the business organization, and then later closing balance of the capital account is 2,000. 2,000. It means the reduction in capital is how much? 500. Vanidhu's share of capital, Vanidhu's share of goodwill is 500. Vanidhu's share of goodwill is 500. Then here, new provision ratio 3:1. Total 6. New provision ratio 3:1. Total amount is 6. Then 500 divided by 1. Vanidhu's share of profit is 1. Then 500 divided by 1 multiplied by 6. Yes. 300,000. Yes, 300,000. 300,000 no 3,000. 3,000. 3,000. 3 million. 3 million. Yes, 3,000. 3 million. 3 million. 3 million. Goodwill of the business as of 31st March 22 is 3 million. Fifth one is answer. Yes, Cambodian. Terms are correct. Right. Right, then here, profit for the year ended 31st March 22 and the balance of the Kusal current account, right? Good balance of the Kusal current account, right? Am I here? Right. Capital account of the business organization, capital account. Capital account of the business organization. Capital account of the business organization, capital account. Right. Capital account and then current account. Capital account and then current. Right. Here, Dasul Kusal. Dasul Kusal Vanidu. Dasul Kusal Vanidu. Dasul Kusal Vanidu. Dasul Kusal Vanidu. Kusal lagi anu namai partnership business gimana? Kusal ni, right? Capital account balance, opening balance 4,000, 3,000. Current account balance, opening balance 150 and 200. 150 and 200. Okay, right. And then here, according to the partnership agreement, the partners are entitled to 10% interest on their capital. No equity transactions have taken place other than drawings of 150,000 and appropriating the profit for the year. Drawings 150,000. Drawings 150,000. Right. Total drawings 150,000. Right. Okay. Right. Right. Vanidu was recruited as a new partner and he invested 2,500. Vanidu invested cash 2,500 to the business organization. Goodwill has been valued and recorded in the capital account as at that date correctly. Goodwill. New ratio debit, old ratio credit. Total goodwill how much? 3,000. Total goodwill 3,000. Then all provisional ratio 3:2. 3:2. Then how much? 3,000 divided by 5. Divided by 5 multiplied by 3. 1,800. Goodwill 1,800 and 1,200. The Sunan Kusal goodwill 1,800, 1,200. And then goodwill again, new ratio debit. New ratio 3 to 1. New ratio 3 to 1. New ratio. Then Dasun debit, sorry, Vanidu debit 500. Vanidu debit 500. Then Kusal debit 1,000. Dasun debit 1,500. 1,500. Okay, 1,500. Right. And then insurance here. Goodwill has been valued and recorded in the capital account correctly, right? And then the net provision ratio 3 to 1 as at 31st March 22. Vanidu's capital account balance is 2,000 and the balance of the Dasun current account is 1,000. A balance amount of the Dasun current account. Dasun's closing balance is Dasun's closing balance is 1,000 current account. Dasun current account is 1,000. Balance carrying down 1,000 Dasun current account. Dasun current account closing balance is 1,000. Right. One of those capital account also matches to the right. That one is okay, right? Right. These are the information given in the question. These are the information given in the question. Right. The equity transaction have taken place other than the drawings 150. There is 150,000 drawings in this business. The profit for the end 31st March 21, 31st March, and the balance of the Kusal current account. Kusal current. Right. The Asul current account is current account balance is 1,000. The Asul current account balance is 1,000. Then 150 and 200, right? This is 1,000, right? Now there's a drawing of 150,000. No transaction have taken place other than the drawing is 150,000 which I am talking about here. Right, but in this question, drawings is the issue. Drawings. Right. They have not given information regarding drawings. Right. That's the issue. Other than drawings. No equity transaction have taken place other than the drawings of 20,000 for the year. They have not given information regarding that's the issue. Right. Here, Kusal current account. Other than drawings, no information regarding the drawings. The profit for the ended, right? Profit, we can calculate profit. Uh, here we'll assume this 150,000 drawings of and then other thing is they have not given wanted to recruit it as a new partner and he invested 2,500. Wanted to enter to the business at the beginning or end of the year. They have not given those information as well. If they wanted to enter to the business end of the year or at the beginning of the year. Right, Lama, here in this question, but the data is not given in the Hamsa. No equity according to partnership agreement. No equity transaction have taken place other than the provision 20,000 appropriating the profit for the year on 31st March 22, right? One was recruited as a new partner. He invested goodwill has been valued capital account as a 31st. The new provisional ratio 3:1 as a 30% March 22. Ne? Yes. Right. Now here the new provisional new provisional ratio as a 30% March 22. Right. It means one is to enter to the business at the end of the year. Yes. Okay. New provisional ratio 3:1 as a 30% March 22 means one is to enter to the business end of the year. Then you can't share a profit to the one to. You can't share a profit to one to. One is capital account balance is right. Right. One is enter the business end of the year. Then we can't share a profit to one to. Okay. Right. No profit to one to. Profit share in the profit share you can't credit a profit share to one to. But other issue is drawings of 150,000. Drawings of 150,000 is other issue. Drawings of 150,000 is other issue. Right. In this question, we will adjust drawings. We'll consider these drawings of Dasun, not Dasun. Yes, Dasun. Right now here, write down drawings. This 150,000 drawings of Dasun. We'll try to get the answer. Okay, we'll try to get an answer. This drawings of Dasun. Okay, drawings of Dasun is 150,000. They have not mentioned anything regarding the drawings. Right. We'll consider this 150,000 drawings of Dasun drawings. Then now I Dasun account debit 150,000. 150 Dasun account debit. Okay, right now I write down drawings of Dasun. Dasun 150. Then right now we can balance current account. Current account now we can balance. Here 1,150, 1,150, 1,150 minus. Sorry. Here now I interest on capital how much? We record interest on capital. Interest on capital 10%. Interest on capital 10%. Opening capital balance of Dasun and Kusal 4,000, 3,000. Then interest on capital 400 and 300. Interest on capital. Okay, interest on capital 400 and 300. Right now we can calculate profit share. Profit share. Then now 150, 1,150, 1,150 minus 150 and 400, 600. We'll consider right here profit share of Dasun is 600. Profit share of Dasun is 600. Okay, profit share of Dasun is 600. Right, profit share of Dasun is 600. If profit share of Dasun is 600, profit share of Kusal is how much? Profit share of Kusal is how much? Here, profit share of Dasun is 600. If profit share of Dasun is 600, profit share of Kusal is how much? Kusal. 600 divided by 3 multiplied by 2. Dasun receive okay, 3. Okay, 3:2. Then here, right there. Dasun receive 3. Then 600 divided by 3 multiplied by 2. How much? 400. 400. Yes, 400. Yes, 400. Hello, closing balance of Kusal account is closing balance of Kusal. Current account balance is Kusal is we'll get it as 500 and 900. 900. Kusal current account balance is 900. Okay, if this drawings belongs to Dasun. Okay, if this drawings belongs to Dasun, then profit share of Kusal is 400. Then balance of the Kusal current account is 900. Balance of the Kusal current account is 900. And then students here go to calculate profit for the period. Profit for the period of the business organization. Profit for the period. Interest on capital plus profit share. Okay, interest on capital total amount is 700. Profit share 1000. Then 1700. Profit of the business 1700. Interest on capital 400. Interest on capital 400. And then profit share 600 plus 400 1000. Total profit of the business is 1700. Do any answer? What's the answer then? Then answer we can take it as third one. Yes, third one. Not right. Third one. Right. Right. Yes, somebody third one. Not right. Shall we look at question 15 as well? Quickly, Lamai, look at the question 15 as well. I think you may have classes only, right? Look at the question 15 and then we will change the class for the day. Yeah? Right. Question 15. Sorry, 165. 165. What's the answer? Lamai, question 165. What's the answer? According to LK's 10 event start reporting period standard, which of the following are considered as adjusting events? Adjusting event and unadjusting event. Adjusting event. Financial statement for the end of 31st March 22 were approved on 15th June. Financial statements approved date is 15th June. 15th June. Okay, approved on 15th June. Right. What is the answer for the 165? What's the answer for the 165? I got one answer on Dahamsa. Right, another one Yunus. What's the answer? Now here, a wood shelf with a cost of 300,000 was destroyed by fire on 5th April 22. Non-adjusting you. We can't adjust this one for the end of 31st March. We can't adjust A. Now, you can disclose in notes this incident in financial statements. You can disclose. Okay, right. B. As per the judgment given by the court on 18th June. Lama 18th June. 18th June. After the directors approved the financial statement on 15th June. Yes, 18th June. Then we did ignore B as well. We can't adjust B. 18th June. C. The court judgment was given on 20th May for a debtor for his bankruptcy and he owes 30,000 as a right. Yes, C, we can take C. Adjusting event. D, stock cost in 200,000 as a 31st March 22 was sold for 180,000. Yes, we can adjust. Okay, right, we can adjust this. D. E, value of the investing cost in 400,000 as a 31st March 22 is has been decreased to 350,000 on 25th April 22. Lamaya, inventory value, sorry, not inventory, investments value. Okay, has been decreased to 350,000 on 25th April 22. Has been decreased. Am here? Investments value decrease on 25th April. Right. If investments value, okay, start to decrease by 31st March 22, then, okay, here 31st March 22, investments value is 400. Value of the investment is 400. But 25th April, the value is being decreased to 350,000. Then, if investments value start to decrease by 31st March, then we can adjust this E to the financial statement. But if investments value has not decreased as of 31st March 22, then we can't adjust this E into financial statement. You see, let's say here the financial year ending date is the discussion question number 15, 15, sorry, 165. Okay, 31st March 22. Okay, on this day, investment cost is 400,000. Right, and then 25th April 22, investment's value has been decreased to 350,000. If value of the investments has not decreased by 31st March 22, and value of the investments decreased to 350,000 on 25th April. Am I on 31st March? There is no deduction. Then we can't adjust this one. Why? On 31st March, investment value is 400,000. But on this day, because of some market issue, the value of the investment decreased to 350,000. Then we can't adjust this one into the financial statement. But on 31st March, value of the investment is 400,000. 400,000 no above 400,000. Because of some sudden change in the market, value of the investment decreased to 350,000 on 2050. Then we can't adjust this one. But if this reduction was started on 31st March. Okay, now step by step value of the investments start to decrease. By 31st March. Okay, by 31st March. So before 31st March, it means then we can adjust this decreasing investments to 31st March 22. Logically, start कर देने May date के ना drop पे ना value का घेना पड़े जिसका ना पूरा. But if the balance decrease to 350 because of some market changes on 25th April, then we can't adjust this one. On 31st March, value is 400,000. No impact to investment. No decrease in value of investment. Then we can't adjust. Here, the best option is second one. The best option is second. There is no indication. There is no indication regarding just that decrease as at 31st March 22. For the 31st March 22, there is no indication. There is no indication that the investments value has been decreased on 31st March 2022 as well. May later now indication that. Okay, therefore, we can take it is better not to take E. Therefore, the best answer is second one, C and D. C and D. C and D. Okay, C and D. Question 15, 165. 165. Okay, right. Right, guys, enough for the day. Enough for the day. We'll meet again next Tuesday. Okay, enough for the day. Right.